Welcome back to the Big Skinny with Lou Basenese, now joined by Dale Smothers, who was supposed to be sitting next to me in this studio, but lo and behold, we had another winter apocalypse here in New York City. So you're joining me from home. Where's home for you, Dale?
Lou, home is in Campbellsville, Kentucky. It's South Central Kentucky. We have offices that span from Eastern Kentucky to Western Kentucky, and I'm right in the middle.
I love it. I
Yes,
love
sir.
it. All right, so let's get right to it like I did with Eddie. What's your thoughts on the markets right now? Nvidia, the reaction to that, the AI sector in general. How do you make sense of this for investors that are coming to you to give them wisdom in uncertainty?
Sure. Clearly there is a rotation out of AI. I think that names like Nvidia are priced for proof now. We used to talk about being priced for perfection. No longer is that the case. They're priced for proof. And even after getting this proof in the most recent earnings report, the market still tends to flee from a name like Nvidia, which is shocking to me, to be real honest with you. I think it's providing us opportunities that we need to be watching and taking advantage of, opportunities in Microsoft, opportunities in Amazon, opportunities in Apple, these large cap names that you want to be a part of. I don't think that you should sleep on these dips that we're seeing.
So have you been buying for clients in some of those Mag 7 names? I mean, in particular, are there certain ones you really like above the rest, or are you just buying them kind of in the group, or how do you view that?
Yeah, recently bought some Microsoft. We bought a little bit of Nvidia after this most recent sell-off due to the earnings. I mean, again, the earnings were great, and we have a client base that needs a little less volatility. And
Yeah.
so we are heavy index, Lou. We're heavy in the S&P 500, even RSP. And when we see names like Nvidia or Microsoft take a pretty substantial haircut, we're buying that dip and we'll sell the rip that could very easily follow in the next 2 to 3 months.
So you mentioned RSP. That's the equal weight S&P 500, which we've made a point of bringing up to people that as this whole Mag 7 trade, this monolithic trade breaks up, I said it's a boy band that broke up, right? They're all going their own ways.
Right.
So the equal weight's really a compelling, attractive opportunity. So help me understand your thesis for being an RSP and what you think the outlook is for the rest of the year in that position.
Yeah, I think that position for us became a little bit of a hedge, to believe it or not. Right at the beginning of the year, we kind of position our long-term growth side of the portfolio in that RSP position, heavy in those positions like RSP. We're still in SPY and QQQ, but RSP took a pretty overweight position in our portfolio because we kind of assumed this rotation was going to continue all the way through Q1, which it has. And as we've seen the market, it's funny because when the market sees AI innovate, it seems as if they hold a funeral for the old guard. Software is a great example.
Yeah.
And we would pull out of the RSP position, having exposure equally to the other 493 and buy into these dips that we've seen in the Mag 7. So far, it's played out nicely for us. The SPY or even RSP compared to SPY, it's night and day difference because of this broadening out that we've seen. But if you compare that to the Mag 7, my goodness, you're down 10, 15% in some of these Mag 7 names, and you're up 10 to 15% in RSP or HDV, another ETF that we really like for dividend playing positions.
Love it. Yeah. And these things change gradually and then suddenly. And that's definitely happening out with these equal weight in the Mag 7. So question for you, talking on that same thought line, gradually then suddenly oil prices absolutely through the roof, even before we started attacking Iran, right? And intervened in the Middle East.
Sure.
What do you make of oil prices here, the energy sector being the top sector this year? How are you positioning or thinking about positioning clients in those assets?
We were not planning on oil being the leading sector year to date for sure, especially in the administration we see. I don't think that they are playing very favorably to oil companies, but I'll tell you, the biggest thing that we're watching right now is oil prices in terms of inflation. That could cause a lot of trouble for the Fed. It could make this decision that they are facing in just a few short weeks even more complicated. The oil prices have somewhat concerned me over the last couple of days, and especially leading into, it's like when we heard that we were going to essentially carry out this military operation Saturday, then Sunday, and we're just anticipating what's going to take place. You see the futures crank up on Monday morning. You just knew that oil prices were going to go higher, and like you said, it's been leading up to this even before the Iranian strike. I think that if the Strait of Hormuz is actually shut down for 2 to 3 weeks, we're going to have a little bit of a crisis here in the oil prices. And I do think that the American energy independence, the essentially the policy that has been ushered in with this Trump administration, is going to help us in America not feel that. But
Yeah.
after multiple weeks, Lou, we could start to see some price pressure at the pump, and that will just lead to more inflation,
Yeah,
unfortunately.
no, I agree with you. And I work, my day job is with an oil and gas company. So I've been saying for months that, low 60s and sub 60 prices don't work, but north of 80 concerns me as well for the same things that you mentioned. It starts creating reinflationary pressures. Where else do you see the potential for reinflation, right? People talk about the tariff trade. That was a tax and reinflationary. Maybe it wasn't. How do you view that, and more in the construct of what the Fed's going to do next? I mean, do you think we get another cut with Powell, or are we waiting for Warsh before we get any more cuts?
Yeah, I think we're waiting for Warsh, to be honest with you. I think Powell is going to, for whatever reason, going to hold off until he is completely out of this seat. I don't think data really supports one way or the other. It's funny because this is truly an ink blot test. If you look at it from one side of the aisle, you can point to why we should have cuts, and you look at it from another side, why we shouldn't. I
Yeah,
think that
well said. And you
Tony,
think Powell just holds pat in that situation when he's got the cover? It can be interpreted either
I
way.
do. I do. I think that he's going to hold, just like you said, he's going to hold pat. I think it could be a little bit political, to be real frank with you.
Yeah.
But at the end of the day, I don't think that we see many rate cuts coming until we get into Warsh's, tender and his reign over the Fed. Now, I'll tell you, Warsh, in my opinion, when he was elected, whenever he was selected rather and then appointed, I think that he's going to try to cut at least another 100 basis points. I think we're trying to get down to this 2.5 for
Yeah.
neutral,
Well,
and that could be a major tailwind for the market.
no, and I agree with that. I was actually at a private dinner with the Unleashed Prosperity Group, and he was in attendance, and he wasn't allowed to say anything because of the position he's in, but he got plenty of feedback from the likes of Steve Forbes and Kudlow on what he should do. So he's heard that message. But how do you position? Let's tie this all together for your clients, right? You anticipate Wash maybe going another 100 basis points or more lower. How do you change your allocation to fixed income in that scenario? How do you think of equities? How do you think of geopolitical risk as you're putting portfolios together for your clients?
Sure, we have seen fixed income become more in favor over the last 6 to 12 months as we've started to kind of anticipate rates lowering. We are big proponents here of having risk on and risk off allocation. So we actually have trademarked the risk on, risk off portfolio for our clients who are more focused in maintaining what they've currently saved. We know that when clients enter into retirement income phase, losses hurt them more than gains help them. And for that reason, we're happy, just like your previous guest said, essentially hitting these singles and doubles. We're
Yeah.
not looking for home runs. But with that in mind, I do believe that these rates lowering are going to impact savers. So here's what we're turning to. We like dividend yielding equities, and clearly we've been right so far. Year to date, the dividend sector, I mentioned HDV at the top of our segment here. HDV is killing it so far because of this rotation. I
And
also
what is
like
that? What is that one? Is that like the dividend aristocrats? I'm not familiar with that one.
it is a dividend aristocrat, but it's not the dividend aristocrat. It's the S&P 500 dividend paying. They've had consecutive rising dividends, so they would be deemed a dividend aristocrat. It's a pool of dividend, and I like the dividend aristocrat NOBL ETF as well. This pool of stocks, if you will, that are paying strong dividends is a great place for us to have a little bit of exposure to offset potentially lower rates on things theoretically that right now I like fixed income, but we're
Yeah.
buying short duration fixed income, not as much long duration. And so a year or 2 years from now, we could see that yield substantially lower than it is
Yeah.
today. Dividend play. And here's another one. We really like options. We like buying a call with a put that we've sold. So we sell the put, we collect the premium,
Okay.
we buy a call, and we get a little bit of a collar there around the S&P 500 or the Qs. You can
Okay.
do this in a packaged ETF as well called a buffered ETF. Innovator is a place that will go for those. This gives us a lot of upside potential, but it decorrelates when the market is moving down, which is great for our clients.
Yeah, so some very novel approaches to tactical management. I can appreciate that, the nuance there. What do you think about some of these more speculative areas of the market? Small caps, biotech. I'm assuming crypto's not anywhere on your radar, rightfully so. But how do you incorporate when clients come to you and say, "Well, everyone's talking about the crypto sell-off. Is it a buy or small caps or biotech?" Where do you find places for them, or don't you in the portfolios?
Lou, I do believe that crypto has a place in a portfolio, especially if we see it get down just a little bit lower than it is right now. We have not been a buyer of crypto for our clients. We do have some speculative growth oriented clients that come to us naturally wanting us to grow a piece of their money, or maybe it's a young client wants the entirety of their portfolio. I like small caps in the index form for the majority of our clients. But for our speculative clients, I'll tell you a name that we're hot on right now is Applied Digital. We have bought and sold this at an incredible peak and trough trade. We have continued to buy it in the trough and sell it at the peak. Applied Digital is a name that we're right now looking at as a long-term potential
Yeah.
play if you can ride the volatility, but it's got some trading
Yeah,
opportunities
look,
in
I
there
mean,
as
look,
well.
I was pulling up the chart as the guys were too. There's some great trading up and down here. Wow. Remind me again what Applied Digital does too. What is their main business here?
So they're basically a data center.
Okay.
They're a part of the data center sector. The problem is, and the reason we've seen such volatility is they're core weave heavy right now. So core
Got
weave, Nvidia, they're on that side of the AI trade. So I like Applied Digital right now, especially as there is talk, and you know how it is, the scuttlebutt in the trading community of a potential deal with Apple. And in any of these names that we mentioned, just a little bit of news is the spark to take it higher. So if you can buy it on the news and maybe sell once the news is announced,
Yeah.
you tend to make a little bit of profit there.
No, we love this space. I've been TerraWolf and IREN and Cipher Mining and Core Scientific. I just haven't. I don't have enough capital to also get into Applied Digital. So maybe I got to
Right.
come meet with you. Hey, tell us where people can find you nowadays. I know you just mentioned you just kind of started out. You were a contrarian on X. Now you're on there. I'm a contrarian on Meta and
Yeah.
Facebook. I'm still a holdout. But where do people find you to get your insights on the
Sure.
regular?
So Facebook is predominantly where our clients live, and that tends to be where we kind of market, where we put our things on. RD Smothers Wealth Management, the formal name on Facebook. RDS Wealth. We actually work primarily with clients who are close to or in retirement. We have a podcast, the Retirement Matters Show. The Retirement Matters Show, where we basically go in to tell a little bit of a story about just living happy in general and how you have to retire with purpose. And then we go into some macro theory, if you will, about retiring and retiring well, what we like to call living happy in retirement. All of this that we talk about, Lou, here's the thing. Everything we talk about is noise to the client. They just need to know that we know what we're talking about. And so some
For sure.
clients that like the technicals of it all, you may not find a lot of active trading. A lot of times will actually not be in a retirement portfolio. It's the boring that works in retirement
Yeah.
portfolios most of the time. And that's what we discuss on the Retirement Matters podcast.
Oh, well said, man. I firmly believe in that approach. You got to educate as well as you hopefully increase the bottom line of the people that you serve. So,
That's
listen, really
exactly right.
enjoyed the conversation. Would love to have you come back on again in the next couple months here, especially when you're back in New York. But
Looking forward
and
to
it's
it. Hopefully
not,
I don't bring the snow with me.
yeah, please don't do that again. Yeah, really enjoyed it. Look forward to seeing you again soon, folks. We enjoy you being here. Don't forget to chime into the conversation,